Dear Daily News Report viewers, after watching this video, you can reach the video we shared yesterday by clicking on the top right button. The main topic of yesterday's video was about martial law in America 2020. We recommend watching, subscribing, and sharing. Thanks in advance. Virus forces Deutsche Bank to confront old fears. The mood in Deutsche Bank AG's headquarters in Frankfurt was tense. It was the end of March. Customers would draw in credit limits as quickly as the bank's treasury department will be on the alert. According to a person who knows the subject, liquidity was never a problem. However, the department, which also attracted the attention of the European Central Bank, underlining the radical restructuring plan of the general manager, Christian Sewing, for less than a year. Deutsche Bank is under a microscope as governments rely on banks to open trillions of dollars in funnels to companies swinging from the coronavirus pandemic. It asks questions about the historic decline, its impact on the German lender, who has made direct losses 5 times a year, and how much government guarantees will allow to continue lending. This crisis is really terrible timing for Deutsche Bank, said Ingo Frommen, an analyst at Landesbank Baden in Stuttgart, who has a hold recommendation on Deutsche Bank shares. Sewing was delivering and winning back the trust of investors, but now the insecurity about just how solid Deutsche Bank is has come roaring back. Wall Street Force. Deutsche Bank is the largest bank in Europe's largest economy and still a force in the Wall Street debt markets. Deutsche Bank has tried to ensure that stakeholders have entered the crisis stronger than it has been for a long time. He said that in mid-March, this year's business continued its favorable course in the fourth quarter. However, while Sewing refocuses the bank on the traditional strength of Germany's exporters, most of these companies are at the center of the storm. Even after cutting risky assets, Deutsche Bank still has one of the largest conglomerates in large banks, which is hard to evaluate. And in the United States, the crisis revived the debate about the lender's relationship with President Donald Trump. In particular, senior executives, including Stitching, are now considering cutting their midterm revenue targets for the second time in less than a year. Probably no decision will be taken until the impact of the crisis is clearer. But the bank said, along with other companies, may already risk the outbreak's goals in March. Analysts surveyed by Deutsche Bank suspect that the lender will be anywhere near the revenue target of 24.5 billion euros in medium term, and consensus estimates are predicting 21.3 billion euros by 2022. Deutsche Bank spokesman declined to comment. Bad credits. In a recent note, Deutsche Bank was not the only borrower who experienced rapid disadvantages in March. However, analysts at JP Morgan Chase & Co. stated that customers who simultaneously pulled down their credit limits were at risk. According to analysts, they do not have the largest volume of undrawn credit and liquidity facilities, but in 40% of total loans, they are heavier than other European lenders other than Barclays plc and Natixis SA. Moreover, Deutsche Bank will see the biggest hit in the key capital ratio if these lines are trapped to the degree JP Morgan predicted in its basic case. If the crashes continued, United States banks allocated $25 billion in the first quarter to account for the risk that more customers could not pay their loans. In a statement Friday, Bloomberg is trying to avoid such a hit as Europe's lenders have no financial power. Deutsche Bank has allocated less money than Eurozone peers for bad debt in the past decade and said it focused on high-quality borrowers. According to the data compiled by Bloomberg, such expenses amounted to 0.17% of last year's loans, the fifth lowest in the region's 24 most publicly traded banks and less than half the group average. I haven't seen Deutsche Bank overlending and the credit book looks very diverse, said Andreas Meyer. Andreas Meyer helped manage more than 3 billion euros, including bank bonds, at Remia portfolio in Hamburg. Deutsche Bank also sold billions of risky securities and quit stock trading. However, by December, it still stood over 24 billion euros in hard-to-value assets such as distressed debt or illiquid loans. With the high-yield bonds and leveraged loans market closed effectively since March, banks may face losses in assets they hold and be stuck with new loans they agreed to grant. Deutsche Bank, one of the Wall Street banks, committed to providing billions of dollars to insignificant companies by mid-year. Bloomberg reported that $11 billion was included in the leverage acquisition of Thyssen Group's Lift unit, one of the 16 banks that must give T-Mobile US Inc. a $23 billion loan to allow the mobile carrier to close Sprint Corp's planned acquisition. He also said that amongst lenders stuck with debts backed by MGM Grand and properties in Mandalay Bay, those who are familiar with the issue last month in Las Vegas. Deutsche Bank said that efforts to reduce risk, rigorous insurance policies, and, most importantly, the revision of the strategy announced in July provided a better basis in recent years. Like other banks trying to contrast with the financial crisis more than a decade ago, this time it's manifested itself as part of the solution. Given its key role in financing German companies, the bank is in close contact with Berlin on the government aid package. In a newspaper interview last week, board member Karl von Rohr said there was no reason to worry about the power of the lender. Easing up on banks paying attention to the overall law of profitability of European banks, regulators encourage them to use the flexibility provided by flexibility accounting guidelines to delay provision for bad loans and soften the impact of a crisis where many hopes will be short-lived. The ECB has also released 120 billion euros in capital, allowing banks to press certain buffers, while national authorities in the euro area have invested over 20 billion euros. Still, analysts in Barclays warned that Deutsche Bank will declare losses this year and next year. Deutsche Bank is among the weakest banks in various metrics for asset quality and capital. If they are right, this has lost 7 years for the largest German bank. The bank is always put in this box and just can't get out, said Meyer at Remia. Every piece of negative news then serves to fulfill those expectations, reinforces the negative bias, and pushes the bank further into that box. I like Deutsche Bank best when I hear nothing about them. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.